we are here to talk about Goldman Sachs. This is a quick daily chart. And Goldman had gone into a bear market reversal trend. And when they bounce up like that, they make the lower lows. It bounced up here again, but guess what? The trend, the bear trend, never changed on Goldman. And you can see the thing is that you're never going to go straight down in a bear trend, but you'll have what we call a reversal to the bear. Goldman never left its bear trend, and what happens is that the SMF Pro Trading School is going to teach you how to trade a short-term pop, short, a pop, and a short, because the trend had never changed. But there is trading ranges that we have here at Stock Market Funding using mathematical ranges. This was a mathematical trend reversal to the upside. Then there was another lower low. Then people got sucked in here, going into, the holidays and into January. Well, I'm sorry, people. That trend, and right here, 3 days up and right back here. The trend on the upside move is very weak. The daily sell signals and whatnot. I'm going to go to a 200 week. And I'm going to show everybody here that bear bull trends don't change on a dime. Your mind might change a lot. But I will guarantee you, as you learn how to trade this way and understand the ratio analysis, the strength of a bear trend or the strength of a bull trend, is that you are going to be a professional. You will take that move and you will short it again. You can use calls, put options. There's all kinds of things that you're going to learn here how to do. But just remember, when you buy the bottom, you got to sell it because it's going to fail. I'm going to pause the tape and go to my weekly chart. I'm going to give you a lesson. We are right now have gone to the Goldman Sachs, and look at when Goldman Sachs was down here to establish a new bull trend from its original bear, which was straight down in 2008, is that the 10-week moving average had to flatten out. That's the blue line. You can't count it because you got to close 4 weeks above the 10-week. The 10-week has to flatten out. It has to start going up like that. Goldman attempted its first bull move here, gave up the move, and we got back above the 10-week, but the 10-week was rising. That was the time to buy Goldman on the dips. The 10-week, the 20-week went all the way up, and Goldman went all the way up, and Goldman led the market higher, and Goldman led the market lower. What I'm going to show you here is the power of the 10, 20-week moving averages to establish a bull or a bear trend. And it's the SMF Pro Qualifier, the SMF Bull and Bear Market Trend Analysis. We have a tool that I developed that works 100%. Haha. And it's something that you need. Now watch. Goldman makes the high up here. People know that we were shorting that high. You can ask the pro trading students. And we have lots of videotapes in our video library when we were doing the trades that the public doesn't get access to. But these are weekly candlesticks. When Goldman closed 1 week, 2 weeks, 3 weeks, 4 weeks, the weekly close below the 10-week, 4 weeks in a row, put Goldman in the bear qualifier trend. And we came down, and we never, ever have gotten above it. You got back above the 10-week here. It was only 1 week. You would have to have 4 closing weeks above that 10-week. The 10-week would have to be flat. It started to descend. It's gone down. The 10-week has lost a lot. Dollar price movement in the 10-week has declined. The bigger the dollar price reversal in the 10-week going downhill like it is, that means that any move up is even going to be weaker. And Goldman Sachs is in another bear qualifier, a double bear. We already showed you the first bear qualifier. Now it's a double bear. I'm going to stop this tape, and I'm going to start another tape where Brian Plain can have a 2-series tape about using the weekly charts to establish bear and bull trends.